Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today's agenda, we'll go through a market update and then I'll go through some of the earnings trades. I don't think Joe has anything to present, but always open for a Q&A at the end here. So let's get started. Excuse me. So we had some state transitions. SPX Russell went into 5. NASDAQ went into 7. One I saw in there just happened was the dollar. We've been talking about that being a strong headwind for stocks that dropped into 8. I'll pull up that modeling so we can actually take a look at that. Side of here, very elevated in the green pie overall. The state ones are getting up there pretty good. That's the highest percentage of stocks are state ones. So really not much movement, obviously, from last week. We had talked range bound for quite a while, probably be up until next week, unless we get some kind of big numbers tomorrow. Obviously that can sway the market a lot, the inflation numbers, GDP. So let's take a look at the market pulse. So, the past year or so, the crossings of state ones over state eights have been kind of like the tops. That's January, right here, here was a midterm, short-term top. So we've crossed again. So really it's just, longer term. We also talked about these states. Let me just pull some of this out. So the 1s, 5s, 7s being a lot higher than previously. 7s were kind of the big state there, but from previous lows in the market, those got really low down here for the 5s, and not as much the 1s, but the 5s had dropped way below. And this time they held up pretty good, which was, we talked about that being pretty bullish overall. So, there's a lot of things, working bullish, but we really have a problem getting over, the resistance levels that, we've been harping on for a long time. I mean, if we can get over those, I'd be more bullish than, the neutral that I have been. So, sorry, my mouse is acting weird. Okay, so what to monitor. These state eights are, and the new platform is really cool. We have like the market pulse stats on the front page, so you can see down here the 52-week low for state eights is, we're at it right now, 1266. So obviously that's going to be a bullish sign overall. We are getting a little bit on the new highs, but obviously not enough. We only have 29% in state one right now. As far as the year, I think we're right at the 52-week high for state ones also. So for a year, we just been beat down. So it's trying, the market's trying to be bullish here. But, as we talked about, those resistance levels, the downtrend for SPX and, that 1900 level for the Russell have really been a problem for the market to get over. Seems like every time they get up there, it just turns around. So, so let's just take a quick look at bullish bearish. All right, so we got it's very elevated here on the bullish. We got right around 78%, and as you pull back, we got up around 80 here in August of last year. Last year, and that was the pretty much 52-week high on that. So we're right near that. We're, as far as all this data, we're really close to, all the bullish highs overall for the market. So it's just a matter of can it push through, or we're going to fail at resistance over and over again. I mean, at some point we're going to break here, and I'd say within the next month, we're going to get a direction. This other one, 200-day simple moving average. You can see here back, was that 2 weeks ago? Yeah, we had a crossover. So there's more stocks, at least the ones that we're tracking, with their moving average, their price above their 200-day moving average. So you can see the whole year here. The last time right there, the 200 was above, the aboves were higher than the belows. It's kind of a tongue twister there. Anyway, so, the 200-day aboves were higher, over a year ago. And, that was the last time. Since then, it's just all been kind of, downhill overall for the market. But, we're seeing a little life here, so it's just like a lot of things, kind of pointing bullish. But, really we need, confirmation on things. We need to start seeing some more highs. We got to break above the resistance levels and hold above there. That's really the big thing. But so let's look at the stocks. So SPX got in, state 5 here on the 20th. We went up, hit the second target, kind of flatlined. I think we're right at the entry price, right around there, currently, a little above. So, that trend line is pretty much right up in here. I'll pull up the graphic. So this is for SPY, but this is the downtrend. And, this is just like all over Twitter now. Everyone knows it. We've been talking about it a long time, but now it's really out there. So you can see it's just kind of continually, tested it and not got through. So, that's kind of the key. You can see here, that's our state 5 transition. We popped up and, turned back down. So, on average, we'll be in here like, 13 trading days, so a little over 2 weeks. It's doing the typical move, coming up here. So now we're back on support today. So typically, we'll get a run up here. So that would entail it getting over, basically that huge trend line that's been, in effect for over a year, so we'll have to watch that. So really, just kind of short term, you want to see, make sure it stays above that entry price, that'll be bullish. If it keeps coming down here, testing, and then we'd expect a bounce. If it breaks through, obviously you got, down here, the stop losses. And, the trading range for this that we have is 3,800 to 42. So 42 is off the chart here, but really, the key is that downtrend line, and I'll show you on the chart. Next state from here, about 40%, about 50, over 50, it's going to get bearish. So state 6 or state 8. So we'll have to see probability wise, but just this whole downtrend that we've been in, the 5s, if I just do a 1-year chart, the 5s have pretty much been the top here and here, these 5 transitions. So we just have to be careful of that. So, if it can get out of 5, if it can pop through, obviously it's going to be very bullish. If not, I'd expect another rundown, because we haven't broken the trend, the downtrend. And everything's kind of setting up for what could be, a pullback, and then another run at it maybe. But right now, those fives have not been good, for the last year, pretty much, at the top. So, all right, let's look at the chart. I'm not going to draw the long trend line. I pulled that up on that chart. They did a good job here. So that's still in effect. Our trading range, which has been, this trading range has been pretty spot on. So that 3,800, and then, the top, it's going to be that 42. But really, the key is that trend line that we talked about, and we're right on it here. We were testing it there, so now we're back down below, in this kind of range. So just keep your eye on that trend line. This support held really well last time, and if we do break out, that'd be the next level that we talk about. 42, getting up past that. But the key, obviously, the trend line. So as far as Russell, different, similar, but has like a set resistance level. And we've been talking about this for quite a while. 1900 has been a problem. See here, the high of the current state, 1896. Anytime this gets up near that 19, it's peaked over it, I think, twice in like last month, and just, turned right around immediately. So most important number for Russell, that 1900. Stay modeling wise, obviously, we had a nice run up here. So, if we get back, same as SPX, if we get down, in this support 1850 something range, and you see it acting like support, then we could get another run up, another try at 1900. So, down below, obviously trading range for this is 17 to 19. That's the big range. So, we're obviously at the top here. So, state-wise, I think this went in a day or two for SPX, but the same story, as SPX. The fives have been the tops here, pretty close, right around almost perfectly on tops for the past year for this downtrend. So, so we got a lot of conflicting things. We got some bullish things like the SMA. We got, okay, these have been the tops. This is about 65%, 2/3 of the time. Now this is about half and half bullish bearish, so a little better than SPX. But just, for the last year, this state has been the top, trying to get up, goes in 8, up 7, then gets 5, and then fails, it goes back down. So a lot of conflicting. It's really, I think it's just a matter of figuring out, can we get above minutes, the 1900. We had that one false breakout, but it's been quite a while. We've been talking about these levels, and they still are in effect until the market finds a direction. You can see, how many times have been we had the false breakout, but 1, 2, 3, 4, 5, 6, 7 attempts, but just like SPX, the bottom of this has been really strong. So, the 3,800 for SPX and then 1,700. So, this has been really good support. Seems like it wants to be bullish, but, till we can get above there, I'm still neutral overall, with this range. Okay, just want to pull up, this is the dollar index. We talk about this a lot, it's kind of headwind, the currency relative value of the dollar versus, like the pound, the euro, all that. So this one had been on a tear. This doesn't move the price as much, but it's been on a bullish tear for quite a while. So you see the last time is in state 8 was April 22, 2021. From there, it's just been, pretty much straight up. So it just transitioned to 8. So I haven't been watching the currencies as much, but something to keep your eye on. If this falls, that's obviously, a tailwind for stocks. It helps stocks, if the dollar's relative value falls. So this is another kind of bullish indicator. We'll see if it actually, actually drops in state 8, but we'll have to wait and see how that performs. I didn't look today how it is, but yeah, it's pretty much flat. So, but just something that caught my eye, I wanted to bring up there. So, okay, before I go through the news stuff, any comments or questions on market analysis here?
Josh, Dan here.
Yeah, hey Dan.
Hi, can you put on the 50 and the 200-day moving average on the SP 500?
Yeah, that's here. It's up already. So
Oh, okay, I see.
Top one's the 200 and the bottom's 50.
Yeah. Yeah, I've been keeping an eye on that because looks
Yeah.
like the 50 could possibly cross the 200. And usually that's an indication that's supposed to be the end of the recession. But I think that's going to be a huge resistance line,
Yeah, I mean, that's definitely bullish. They're closing in. Typically on these runs down, that 200 pretty strong resistance to the upside for stocks. As you can see here, has problems staying above that. When you get the cross, the 50 cross and above the 200, that's typically a good, a good signal overall.
Yeah.
It's like here's the cross down March 2022, and it's been almost about a year there. Yeah, it's a good, glad you pointed that out. I think that could be bullish. We get a cross and some follow through.
Yeah, is the PPI supposed to come out on Friday?
We got a bunch of stuff Thursday, PCE, some
PCE core is on Friday.
Yeah. I don't see PCI, but I got a bunch of inflation numbers, and I think there's a GDP rating in there too. Something.
Okay.
Yeah, this obviously, could move markets, this kind of data.
Yeah, looks like it could be an interesting week.
Yeah, and I mean, we're only a week away from, the Fed meeting, right? So.
Yep, and I was going to say that a lot of those bullish runs up until they turned back around, where the turnarounds were Fed meetings most of the time. So, like you just said, we're coming up on another Fed meeting, and we're right back at the top of the trend that we're watching here as a potential resistance.
Right.
And so I think Microsoft was the first, I guess you could say Netflix was the first big tech stock to announce, which was last week, but I think you throw out Facebook and Netflix nowadays from the mega caps that are trendy, and guidance. That report was really good until they mentioned guidance,
Right.
which is one of the reasons I wanted to bring that up right now. Is there was and I think Microsoft was 4 to 5% up after hours until they mentioned guidance, and then it was crashed. It crashed down to, I think, a 2 or 3% below the close in less than a half an hour.
Right.
And that was just that they mentioned forward guidance, and they pulled back on forward guidance, and wham. And that's why the NASDAQ futures were off this morning. Was, all the big techs are saying, well, it's probably, if Microsoft is such a good, has such a good clean balance sheet, and everybody uses everything Microsoft, then it can't be bad, but it wasn't good. So if that's a trend kind of thing for all the reports that we're going to hear in the next week and a half, right before the Fed meeting, that'll be interesting. Now, but I also mentioned about the Fed meeting, we're already expecting only a 25% or 25 basis point increase, right? So that'll be less than the 50. So all the bulls will be happy about that. But it's still an increase. And then it's like, oh, how high, the Fed is not going to say whether they're going to stop or not. I would bet you $1 million. They're just going to say, well, we're going to wait for more data, but we're going to only raise 25 bips this time. My pre-summary of what I expect to hear. Who knows whether it's right or not, but that's what I'm expecting. So how will the market receive that? Well, in my opinion, though, they won't know. They won't know. They're waiting for the Fed to stop, and the Fed's not going to tell them they're going to stop until they do stop. So it'll be just kind of like more of the same, in my opinion, no matter what happens at the Fed report. They're going to say, okay, it'll be a less raise than previous one. It's slower raise, but it's still a raise. So is that good or bad? I don't know. The market will tell us, right? The market will tell us. So that's why I think things are going to be kind of exciting.
Right.
And the VIX is still only at 20. Only at 20. I
think it's unhinged. I think it's unhinged. It's not acting properly. It hasn't been for a while.
I agree with you. I agree. It's during the whole pandemic, it's been weirded. And your point that the market just, once it hits a bear market status, wants to go back up. It just wants to go back up. And people think, well, it's got to go back to all-time highs. But the all-time high during the pandemic was a ridiculous, abnormal all-time high, which in my opinion was unfounded to be that high, and the major indices. So I don't think it's realistic. I think it's going to go right back there like it would be at any normal, bear market pullback. This is a weird one, that a once in a lifetime kind of thing, a pandemic kind of thing. It's like, so, and you mentioned these trend lines, the ones that I've been following, the 15, 20-year SPX long-term versus the 1-year pullback, kind of a symmetrical triangle-ish, is right in the vortex of make or break. So I still think we're going to break out hard, more hardly, one way or the other. I don't know which direction, but those are the factors that I'm looking at for the next week and a half. And earnings are going to be, I don't think, better than what Microsoft was pitching last night. We'll have to see.
I saw something on Twitter. It's like some analyst came on and was like, if Microsoft put their guidance in their report, it would have been down 10%, but they waited to just announce it on the call instead of putting it out in print.
Yeah, I couldn't agree more. It was funny. I was watching tick by tick, from the close up until the conference call, and that was even during the conference call in session. They kind of was in the back part of that where they announced that guidance we're going to pull back on. And it's like, oh, bam, 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 bam.
Yeah,
stock took off to the downside like nobody's business.
Well, that just confirms, it's all about forward guidance, pretty much.
Yep. Anyway, sorry for the long-winded, but there are a few points in there that were right on your analysis that was spot on again. So thanks.
Yeah, well, one thing, that's great points, Dave. That kind of leads into some, and I'll keep the questions going, but just to kind of go along with what you're saying. So it's, the Fed next meeting next week, it guaranteed pretty much. It's 97% for a quarter hike. So me and Joe are going through this, as you go out, they're expecting March to be, another quarter hike, right? But what about out here? What do you think? Like, there's nothing above pretty much 5, that second hike. So that's what the market's pricing in. You can see, not getting above 5. That's pretty much what the market is pricing in, very minimal. So, if, I know Powell's been kind of, raining on the parade, a lot, with attacking inflation, which, obviously they got a big task there, but it's
Well,
just
the
kind of
two,
kind of
the two,
interesting that, they're not getting above 5 pretty much, as far as the expectations, like ever, they're, I think at this point, they're like thinking pivot by,
yeah, they are, they
December.
are, this whole rally has been based on a pivot, the
Yeah.
bond guy, oh, I'm sorry, I'm yelling in here over top of everybody, but the bond guys have been like saying the stock guys are out of their minds, it's like, it shouldn't be this way. And by the way, the Fed funds, I don't give it more than, it blows in the wind, if there's a inflation hiccup between now and 2 Fed meetings away, those numbers will change fast. So I don't put too much stock into the Fed funds rate that's more than 2 meetings out, because
Right.
it changes too much. And the Fed is waiting for data. They're waiting for
Right.
data. Are they going to have a meaningful pullback on inflation? So far, I don't see, what's meaningful to you or me, but to me, I haven't seen meaningful inflation reductions yet. So, don't know when they're going to stop, but they're gonna bump into their 2 mandates conflicting. The
Mhm.
employment one, they're already laying off a lot of people in a lot of places, so that's going to conflict with the battle against inflation, and that's why the pivot is in place with a lot of the bulls.
Right.
We'll see.
Yeah, we shall see. I thought it was interesting. It's pretty much terminal, like 5%. Like this is pretty much priced in right now that this is it. That's the last quarter hike, March. So it's interesting. My whole take on this, I they definitely needed to raise rates because like the housing market was just like ridiculous, right? It's just but I don't, so they wanted to curb some of that euphoria in the housing market, which is they've done. I don't know if they needed to go this high. Really what it's going to be driving down, the prices, the inflation is, the money supply, and we showed that the M2, which is negative. So that's helping drive down. And then, all this extra liquidity, which, they're slowly decreasing. So, I don't think they need to have rates pumped way up. I mean, you want to, stop the madness in the in the housing market that it was. I mean, if you go to Zillow and you see like prices, for houses, it's a lot of them look like this. It's like, where, and you're like, okay, what changed, in 6 months for a house to go up, like 40%? It was, the rates and all the stimulus and all that. So, they had to curb that. That drove a lot. But really it's about this money supply and, this extra liquidity they're pumping in. So, this will slow economic activity. It costs more for everyone to borrow money. So that does slow some things, but the big drivers I think for the inflation are, the M2 and the liquidity that they went way overboard on. So look at this one. We had a little drop. I think it's 20 billion. So, slowly, I mean, it's real slow. So, it pretty much doubled from, COVID, over doubled. So we're still over, if it was 4 trillion, we're still over 8. And then, our last time we did this long drawdown, that was a 15% drop. So we'd need to get down to here, 7.5 trillion to have the same kind of drawdown. And that's where we had the liquidity issues, which, that's one of my 2 big things are liquidity event or the war expanding. So that's things I keep my eye on. Along with the war, perfect segue. I don't know if you guys heard of the doomsday clock. Has anyone heard of that before?
Yeah, I saw that and heard that and saw the article, yeah.
Yeah, this is interesting. Like I heard about this like a while ago. You know, I don't like follow it regularly, but you know, they have pretty interesting. It's been around a really long time, and you know, basically midnight is some kind of big nuclear event or whatever. Dangers posed by climate and other accidental. No, thank you. So really, it's looking at nuclear risk is what they're talking about right now, and they have a timeline. So they pretty much moved it to the closest to midnight it's ever been. You know, if you go back, the Cuban Missile Crisis, it wasn't this close, but I don't know if it's just kind of interesting, so I wanted to bring it up. But you know, they have a little video that they put out, so they're just concerned with Russia, and you know, I would agree that there's definitely some concern. I mean, they're sending offensive weapons over their tanks and stuff now. It's just not. They're just like egging on, you know, Russia, trying to get them. I don't understand it. So that's another concern there, market wise. So okay, back to questions, comments. Anyone? Saw Sudhir, nothing? Awfully quiet.
No, I don't. I think everything you said is accurate. I don't have any other thoughts. I think we're in a slow, you know, counter trend rally, and I think we'll roll over here in a little while.
Yeah. So you're still, you know, you think those levels will hold and we're gonna pull back?
Yeah, I think we're going to pull back because you know the Fed is raising interest rates only a quarter point, as you pointed out.
Yeah.
Maybe two more times, but they are raising interest rates, and you know, like Microsoft, their earnings report wasn't viewed very good yesterday. So it's dropping. Tesla reports after the bell, and so we'll see. I haven't seen any Microsoft forecasts soft economic conditions, and
Right.
so I think we're going to have to pull back. I think we're a little overvalued.
Mm-hmm. Okay. Yeah, I think Joe's more bullish than me. I'm not sold on bullish until you know we can get above those levels and hold. You know, there's a lot of conflicting data out there. You know, saying this and that, so it's really hard. You know, it's overall. I did want to show another one. This is that guy Michael Burry. I don't know if you remember, he was in that movie, Big Short. Anyways, I follow him on Twitter, but he had basically found, like, you know, if we look at this chart, this is, I believe the S&P, you know, there's like a downtrend here. This is back in 2000. Kind of like the same, almost like same kind of time frames that we were in. I mean, this is like December, you know, so it's like a 1 year pretty much run, you know, on this downtrend line. And then, you know, we broke above barely, you know, retested and then like fell. And, you know, like I said before, you know, these correlations are interesting. You know, I don't know if that's kind of why I pull them out. I don't put too much stock into them other than just seeing, okay, you know, how markets can behave, you know, like, okay, they had this downtrend line pretty much and, you know, barely broke out, you know, pulled back. And then, you know, that was the high. So you have like almost like a triple top here before, you know, couldn't get above resistance level here. And then, you know, it fell. So that's why, you know, I always harp on those resistance levels, you know, overall for the markets. So, and they seem to work a lot, you know, a lot of the time they're very, you know, accurate. So, Joe, did you want to talk about this one? I didn't I pulled it up. We can wait till next week. I didn't get too much time to analyze it.
I didn't either, Josh. I think maybe,
Okay.
why don't we pull that up next week and I'll do some more homework on the overall
Okay.
S&P 500 earnings expectations too.
Okay. Okay. All right. That was it, market wise. Any other questions, comments? Okay. Let's run into earnings. This is the new UI. So we've had, I'll just go through some of the trades here. It's definitely a lot more active. So overall, bullish pre-runners, 12 trades confirmed so far. These 6 all closed out. At their profit targets, fairly short order. So it has been a good start to the earnings. We got 6 active right now with one down, pretty good there, but the rest are fairly flat, slightly up. This one almost hit the target, but so still a good start. If we don't get above those resistance levels, I don't know how well the bullish trades will do. Seems like we dip and then just kind of run back up, and we get trades closed out. Overall, bullish runners, we got 2 active. Both of them are banks. We got one that closed out. Delta closed out, like a week or so. So, one down, 2 active there. Still not a ton of trades, but let's see what else. And I think we got a non-mover. I think that was just last night. Yeah, this one came in last night, or yesterday's trade, General Dynamics. So I think I pulled it up 227. Where am I? So, the lows, obviously you want to keep it in the range. So it's above that lower level of 225. So, it might be down a little, but, obviously you want to keep it in that range. I think it dripped down to 225 and then, came back a little bit. So we still got time on that trade. Obviously it just popped. So, and let's look at there's a ball crush trade, and that was fast. Pull up so you can see. So this was 18th. So the next day, obviously, you had a good return on that one day. Then it's probably back good right now, depending on how much it dropped. But you'd see, you want it right on the red line. The upper and the lower are your protection, and then you have 2 cells in the middle. So it's a 55. No, that's all right. 47.5 and then 52.5 on the top. So obviously, we want it right at that price. So look good so far. I think that was it overall on the earnings. Any questions on that?
Go back on the Fastenal trade. When did you close that?
I didn't close it.
Oh, it's
I-
still active.
Yeah, it's still active. I think you should have, on the first day, you should close it.
Yeah, I closed it and it was profitable. That's why I was
Yeah.
wondering.
Yeah, I haven't, I don't have like a profit on this, like to notify, so it's just kind of slipped through. But yeah, that would be your close day, that right there. I just haven't gone back and done it yet.
Okay, yeah, like GD should be closed today.
No,
iron
the
part.
yeah, the non-movers, typically we give them time.
Oh, you give,
yeah, we give them time. Like if it's profitable, obviously you close it out. Sorry, wrong one. But yeah, the ball crush is supposed to do the first day. So
And the non-movers you're allowing to run a little bit.
yeah, yeah. And I think I put them in the wrong one. Damn it. I put them in Q3. All right, so I got to fix that. Anyway, that's my tracking stuff, but yeah. Yeah, ball crush is supposed to, I mean, there's supposed to be a good crush on it, you know, so you close it the next day. Then non-mover, yeah, you can obviously close it first day, but yeah, you have more time. So, because this one typically won't move as much, you know, that's why it's a non-mover. But I mean, if
Right.
you get a good profit first day, obviously close it out.
Okay.
Yeah. I don't know why I put them in the wrong one. Should be. Anyways, got a little work to do there. Okay, thanks, Sadir. Okay, anyone else? Questions, comments? Me or Joe? You can ask anything.
I didn't see Tesla on there. They closed tonight, or they report tonight. So you didn't
Yeah.
have any of the categories, not even the Gold Crush?
No, it didn't meet the criteria. I know Sean, you know, I know he's not here anymore. He probably would trade it anyway, but I can see, let me see. Vol Crush. I can see how Tesla did. I'll have to. Maybe it didn't get tested. Should have. I guess it didn't qualify
Okay,
for the screening there. I can see if it's in the mover. I mean, it's the same type of trade. No. Well, let me see. 1 second. Yeah. Yeah, it didn't meet the criteria. So it didn't get like screened.
okay.
I know Sean's a big fan, was a big fan of that. I don't know if he still does it or not, but yeah. Yeah, a lot of the kind of trades that we had relied on kind of changed, you know, over time. It's like you know, like Google, let's see if it's even qualified in the 80s. I mean, it's not in our trades anymore. You know, some of the, so it's like a big change, you know, obviously still making 80, you know, still has a decent win rate, but you can see the profit factors have dropped quite a bit on like Google. So, yeah, it's just, you know, these things are dynamic. This was, you know, pure gold for, you know, like 3-4 years or something, you know, and, you know, it just starts dropping out. So I don't know, Tesla didn't meet it, the criteria. So, I mean, you can always, you know, do the testing on your own.
But they should change, you know, as the market changes.
Yeah.
So
Right.
it shows you the back test where you're going back 10 quarters, you know, the ones that are good trades this quarter may not be next quarter based on market conditions.
Yeah, I think, you know, just kind of taking the recent quarters a lot more important than, you know, it's like the trend, you know, things that are hot and, you know, and it changes over time. So they start dropping off. I mean, the profits have dropped quite a bit. Yeah, which is why it's not in these trades anymore.
Okay.
Yeah.
All right, thanks.
I'm sure it's gonna, there's a lot of volatility with that Tesla trade though.
Yeah.
That, let's see if we can pull up the earnings analysis real quick, just the, oh man, no. It's like it's a trap. The earnings pulled up an index. All right, we'll look at the Tesla stuff real quick here.
Okay, thank you.
And Josh, while we're waiting, Beal, just a couple things. You had the bonds up there. They're all in state 5. I'd keep an eye on that. And then I think,
Mhm.
you know, in the short term, just, I mean, here we are a day where the market's well off its lows again. But I think, you know, with the pie being up at 78%, like you were saying, historically, that's really high. And the
Yeah.
fact that coming out of the December 28th lows, I mean, last week we were talking about a short-term pullback. Depending on your index, we only got 2 or 3 red candles, and then off we went. That last run in the last few days turned out to be the 5th leg or a 5th leg coming
Mhm.
out of the December 28th lows. So I think, you know, the height of the pie and these short-term 5 waves would suggest that we are due for a little bit of a pullback. But as everybody's been saying, we got so many numbers between now and the Fed meeting. You know,
Yeah.
we'll see.
Yeah, so you can see, you know, this is like my favorite chart for these type of trades. So it gives you the expected move and what actually happened. So you can see, you know, it's pretty good at saying, you know, there's a couple like back here that popped outside of the bands, but pretty much staying within the bands. I can see, um, let's see if you're doing the weekly, right? We're doing, so we're getting, let's say mid 13. So we got expected move. So here's our expected range. So we would do wow, that's pretty big. So you know, that's the range is 12. So we're getting 13 here. So you know, I'd have to do the math on the napkin, but you know, I'm not sure if it's risk reward worth it. I mean, you're going all the way down. So 132. So if we're doing right above, you know, 132. So we're buying for 2 and we're selling for 6. That's 4. Yeah. That's you know, if you're doing a butterfly. So that 13 and then on the top 50. Oh, it's getting wonky here. So 55. Yeah, not sure. I'm not sure if it's, I mean, when it was high priced, it was a lot different, but that's a big, you know, it's the premiums don't seem as elevated as they used to, but I mean, it's showing they are, but I don't know, you'd have to do the math and see if the risk reward, you know, we want at least like 2 to 1.
Right.
Yeah, at least, you know, preferably 3 to 1, but seems like it'll stay within the bands. You know, typically, you know, these are around where it's at, you know, 12, 14. So,
Okay.
yeah, might be worth a gamble if, you know, if the risk reward's there, you know.
Yeah, it's hard to get 3 to 1, maybe 2 to 1, but I don't know.
Yeah, in between there, you know, I wouldn't go below 2 to 1 though, but you know, in between 2 and 3, you know, if you can get 3, that's great.
Alrighty, thanks.
Sure. And it's on that, I mean, Tesla's on that 100. Me and Joe talked about that a while back. I mean, came all the way back down to that 100. Let's see back here. Anyway, big fall. Okay, anyone else? Questions, comments? No? Okay, well, we'll wrap it up and do it again next week.
Hey,
So,
Josh?
Yep, sure do.
Maybe just one more thing, just to let everybody know. You know, Ashok is working behind the scenes. We've been talking about this, I know, for a long time, but he is working diligently behind the scenes. And I think trying to pick things up in terms of the performance of the platform.
Mhm.
You know, Josh and I are optimistic over the next month or two, certainly within two, that we have some improvements. So we'll keep you updated when we get to the point. You know, we're working on this new UI that Josh pulls up every once in a while. You know,
Mhm.
we'd like to give you all a chance to get into that as well. So we're doing stuff behind the scenes. As we've said before, it's slower than we had hoped, but, you know, we are making progress. So just wanted to give you a heads up on that.
Okay. All right,
The
well, thank
UI
you.
looks great.
Yeah, well, once it's all ready, we'll give you a tour, and then you guys will be the first users on this, so we'll be looking for feedback. And yeah, we definitely like the layout and you know, organize a lot better than this clunkiness. So soon, hopefully soon. Yeah.
Yeah, it looks great.
Yep.
Can't
Let's
wait
do
to
it.
use it.
Yeah. Cool. All right. Thank you all. Have a great week. Reach out if you guys need anything.
Thank you.
Bye-bye.